Good morning to you both. Liz Ann, I'll start with you. I mean, we did see that hawkish pivot by Fed Chair Powell back in the end of November. We had the Fed minutes last week that continued to gyrate markets as well. What are you looking for in terms of commentary, potential guidance from the Hill today?
So, I suppose he'll be peppered with some questions with regard to policy as opposed to what might be the standard questions associated with the reconfirmation. You had Loretta Mester out this morning saying she is sort of penciling in 3 rate hikes. You have the market expecting at least an 80% chance of 4. So, the pressure is on and a lot more discussion, especially in the aftermath of the release of the minutes, about not only potentially ending tapering sooner, but initiating quantitative tightening in conjunction with rate hikes. So I think that's been the reason why we're seeing the weakness in the market that we have so far this year.
Andrew, I want to get your thoughts on this as well, especially when we see a chart of the 10-year yield right now. We saw it testing that 1.8% key level earlier in the week. We saw the downdraft since the start of the year in tech and growth, this big rotation into value. Is that something that continues here, or do you think we are going to continue to see this push and pull between growth and value as the market digests a tightening Fed?
Yeah, great question. So, look, I think you have to bifurcate growth into the uber growth stocks that are trading at multiples of sales, don't have cash flow or earnings, and the large cap tech stocks that generated great numbers last year. I think those stocks are attractive. They've sold off here. The uber growth stocks are down a lot, but they're still trading at a very high, rich multiple. So I wouldn't step in there. So I do think there is opportunity. Look, we're going into earnings season. Right now, the market is focused on the Fed, understandably so. But the story of last year was earnings were up, the revisions were up 27%, and the market was up 28% because corporate fundamentals was better than what Wall Street expected. And I think that's a great setup. We're about to see corporate earnings being reported again, and no one's focused on that. We're focused on the Fed.
Yeah. Andrew, that being said, we're going to have a look back there. What I'm wondering about is the guidance, which, it's not completely clear to that many people it's going to be as good as it was last year, to your point, of up 28% versus what people expected going in.
No question, David, no question. But until proven otherwise, I heard you had a great interview earlier today, right, with Paul Tudor Jones and the CEO of Accenture. And Paul Tudor Jones talked about the concerns about the Fed. And then you pivoted to the CEO of Accenture, and she said the economy is great. The economy is doing really well. So I think the point is that's the struggle this year. We're going to struggle between the Fed and good corporate profits. And to me, when we're too focused on the Fed, you got to pivot and say, hey, wait, are there companies out there that are doing better than what has been whitewashed recently? And so I don't know when it stops, David, but I'll tell you this much. All the people that said earnings revisions are going to stop going up. Boy, they've been, they were stampeded by the bull last year. And until proven otherwise, that's where I'm going to come out.